Good evening, everyone. Time for another silver update. This is the 8-hour chart of the Euro Swiss franc cross provided by netdania.com. You can click on the link below. A couple of things stand out at you, jump out at you. First is this dramatic action here, nearly down to 1 to 1 and then back up to 1.2. And of course, this flat line here. If you remember, approximately a year ago, the Swiss government pegged the Swiss franc to 1.2 euros. So basically, the Swiss hitched their wagon to the euro, the crashing euro, and threatened to print as much money as is necessary to keep their currency from appreciating. So let's look at the impact of that. Now, if we go over here and go to Trading Economics and look at the interest rate, first thing we want to look at is the interest rate. You can see they went from about 1/4%, and then with their pegging there, they went down straight to 0. So they're flatlined at 0% interest rate. So another indication that they're joining the death spiral of all the global economies and governments. Now, some interesting statistics here while we're looking at Switzerland. If we look at the unemployment rate, you can see that the unemployment rate is down to 2.8. The spike up that they were having there was up to 3.4. So still, if we go out and look, let's pull out long term and see how that compares historically. You can see historically the lowest they were at a 2% interest rate. So it doesn't appear that the appreciation of their currency was really having any impact on their employment situation, which is one of the reasons that's given for pegging a currency like that. Imports as well, if we pull out the long-term chart, you can see that imports never really decreased. You would expect that well, the theory is that if their currency becomes very, very strong, then they'll import a lot more. There is a spike there, but this is just noise. So the currency is strong, they'll import a lot more. They won't be able to export. So if we look at exports, we can see that it's pretty much the same picture. They have fairly strong imports, fairly strong exports. Really hasn't changed. So the economic justifications that were given for pegging the Swiss franc to the euro, the crashing, diving, socialist, bankrupt euro, is really not legitimate. The only explanation could be what I gave at the time, was that the Swiss politicians had been co-opted by the corrupt bankers and decided to sell the Swiss population down the river by pegging their currency to a bankrupt euro. Now, the other thing on this chart that's interesting, if you look at the volume, the pegging actually occurred September 6th, and you can see the currency moved immediately to that 1.2 mark. But if you'll notice here, they actually had market activity prior to that, a big drop, and then the peg. So this is your front runners, your inside traders, your corrupt bankers who get information from central bankers, and this is just another indication that we're moving away from free markets. We're moving to complete socialistic government control of all markets, which is a really, really bad thing. And zero interest rates across the board, of course, are going to bankrupt everyone. So I don't buy the explanation the Swiss government gave, and I don't think there's any evidence to support it. Let's jump over to the questions. There's a couple questions here I wanted to address real quick. And the first one is from CM Cirillo. Hi, Brother John F. I'm just a recent viewer of your blog, YouTube channel, about 2 months. I feel super lucky for the opportunity to buy silver at such a great low price. Needless to say, I'm a rookie and still learning. My question is surrounding buying silver. I have NetDanny on my phone, Kitco Go Live Plus. Often check the APMEX site for silver pricing. I'm curious on why they're always different. For example, here on a Friday night, the market for silver is closed and Net Danny is showing ask price of $27.85. Kitco asks $27.89. Atmax asks $27.80. When I was at the local coin shop today, they had the Kitco on the monitor for $27.93, even though my phone, it was $27.87. Luckily, the guy at the counter was nice enough to honor that price, even though it was only 6 cents. Should I be concerned with the price difference? Do you know what causes this? What should I be worried about when purchasing locally? I'm very grateful that you are so willing to share your thoughts and educate us on the power of owning precious metals. Thanks for your time and energy. Regards, CM Cirillo. So the main comment I would make on that is the reason why you have these different prices is that you pretty much don't have a free market in silver. It's going to be the same explanation that you have here with the rigging of the Swiss franc. The silver price, although it trades 24 hours a day, there really are only 3 trading periods. There's the London trading period, the New York trading period, and then there's one in Asia. Now, there's no reason why any of these markets should not be live 24-hour markets, but of course, the manipulators don't want there to be free markets. They don't want them to trade in real time. I find it absolutely shocking that in an age of technology like we have today, and an age of markets and all the things that we have, that we can't get markets that trade freely round the clock for all things, which currencies currently are the only, as far as I know, currencies are the only markets that trade 24/7, and it's still very difficult because you have to call and get a bank quote. So that's my answer to that question. Now, the next question is from Mr. Silver Goldman, and he says, "Hey, Brother John F. I've been tuning in faithfully to every single silver update of yours on YouTube for the last couple of years, 2010 to the present. I've tried to explain to people that I know about silver, its violent upside potential, the thousands of applicable uses in industry, and safety against the failing fiat currency. For the life of me, I am convinced that I cannot lead a horse to water no more than a heroin dealer leading a junkie to a rehab clinic. I've shown people your videos, led them to your channel, given them your website, even shown them some of Chris Duane's videos and many others. My question is very basic. Currently, the silver price is establishing a bottom, which I feel we've already hit. I'm noticing sites such as King World News, Zero Hedge, and many others talking about financial collapse, hyperinflation. In a world of economic collapse here in the U.S., how would a person with anywhere from 1,000 to 5,000 ounces of silver acquire real estate when most people don't even hold the deed to their property? Also, what do you think the prices for a nice McMansion cost if banks aren't accepting silver nor gold? Peace and love." So, a couple questions there. I don't think the metals are fairly priced at all, so I would not recommend at this time anybody who in my family or anybody else that I know who is stacking silver for them to make some kind of trade. I just don't see it as being worthwhile at the time because the real prices haven't been found. It's being suppressed. Now, at the same time, real estate is also being manipulated, but in this case, the price of real estate is being manipulated up, and they're fighting to keep it from falling and finding a true price. Of course, if it did fall and find a true price, then of course the cost of housing for a lot of people would go down. That'd probably be a plus for the economy, but then again, the bankers would have to take a big haircut, and as you know, the bankers are the ones that are manipulating everything, so that's not going to happen. But I do have a chart that's posted tonight on Zero Hedge that I wanted to show you. And this is a chart of M2 seasonally adjusted. And you can see that the question was about a collapse. Well, supposedly we already had a collapse. That was here, the 2007 through 2009 period. You can see there was absolutely no collapse at all in the increase in the M2. This is the period here where you can see you just had a stall in the growth rate where the growth rate had accelerated up. Of course, the first acceleration on this chart is the one from during the Clinton administration. We got another acceleration up. Of course, that was the dot-com bubble. And then the next one, we had a acceleration and real estate. And then we had the slowdown with the 2008 financial crisis, and then boom, they accelerated it up again. So even though there technically was a crash, some people describe it as a crash, you can see they never stopped printing money. They're continuously printing money, and I don't see any reason why they're going to slow down. It's the only thing they have that they can do other than just wrap things up and collapse the whole system and start over. Now, I want to go over to the top story of the night, and that's going to be Olympic silver. As it turns out, the medals that are awarded at the Olympic Games, they haven't been made of pure gold. The gold medals haven't been made of pure gold. Actually, the last time they were made of pure gold was about 100 years ago. So this is actually the century anniversary of the devalued gold medals. Now, we'll read in here and show you how devalued they are. Olympic medals use a lot of metal. These days, the gold medal is mostly silver. The silver medal is sterling silver, while the bronze is largely copper. Last time the Olympic Games handed out solid gold medals was 100 years ago at the 1912 Summer Games in Stockholm, Sweden. I actually did a search for those medals on eBay. I couldn't find them. I would be very curious to know what the medal is worth in those, how much the gold, how many ounces of gold, and what they're going for, but I can't find that information. Gold medals were in fact only gold for 8 years. The 1904 Olympics in St. Louis introduced the gold medal as prize for first place. Quote, gold prices have risen sixfold in the last 10 years, says Terry Hanlon, president of Dillon Gage Metals in Dallas. Quote, prices climbed from $300 an ounce a decade ago to $18.95 last year. The yellow metal has declined a bit and stands at $15.80 in July. Silver prices have also surged in the last decade, but are considerably less than gold at $27 an ounce in July, Hanlon notes. This year's 2,300 Summer Olympic medals are being guarded at the Tower of London until the games begin on July 27th. The 2012 gold medal is 92% silver and 1.34% gold, with the rest being copper. The silver medal is also 92.5% silver, with the remainder copper. The bronze medal is 97% copper, 2.5% zinc, and 0.5% tin. 2012 medals were made by the Royal Mint, owned by the British government, but it didn't automatically receive that contract. The Mint competed with more than 24 other contenders to win the contract to provide the 4,700 medals for London's Olympic and Paralympic Games. Now, if you add the value up, and I did a back of the matchbook edition, and it comes to roughly $15 million. So the value of those medals locked up in the Tower of London cost about $15 million. Now, the cost to the British government of holding the Olympic Games this year, the figure that I heard was $17 billion. So let's do a simple calculation, and let's say we have our 15 million divided by the 17 billion. We come out with about 8/100ths of a percent. So roughly it comes to about 1,800 times that amount to equal the cost. In other words, 1/1800th of the amount of money that they spent on these games were actually spent on the medals themselves. So they had a whole lot of money to spend, and they didn't spend hardly any of it on the medals. That doesn't seem surprising because, again, we're under a paper manipulated system, and that number is about as stark as the manipulation of paper compared to real metal that's out there. I would suspect the ratios are pretty close. That's quite interesting that these metals are pretty much 90% silver, the silver and gold. Again, that's just another indication of how much silver is being used up because it's underpriced. I suspect that if silver were fairly priced, they would be a little bit more reluctant to use up so much silver in these metals. But since it's dirt cheap at $27, they don't have a problem with that. The 2012 Olympic medals were made from nearly 9 tons of metal from Rio Tinto's Kennecott mine in Utah and its Oyu Tolgoi mine in the Asian nation of Mongolia. The Royal Mint in South Wales produced the 2012 medals in a 10-hour process using a 1400-degree furnace. Though Olympic gold is no longer 100% gold, a metal can still fetch big money. And then they go into the auction of one of those. And that's pretty much it for that article. So quite interesting, as it was pointed out on Zero Hedge, that the size of the metal this year is larger than ever. I think, let me see if we can pull that article up. They have a picture here of the Olympic medals, the past medals, all the way back to 1896. You can see that 2012 gold medal looks like it's roughly 1.5 times the size of the 2008 medal, which was nearly 1.25 the size of the 2004 medal. So quite typical of corrupt governments. What they do is they increase the size and decrease the value of things. That's exactly what they do with their manipulated currencies, such as the Swiss franc and stocks and interest rates and everything else that they manipulate. They change prices or peg prices or fix prices, and that causes real repercussions throughout the real world that they don't intend, such as Olympic medals being gold medals being made out of primarily silver. So the manipulation goes on. The markets are more and more manipulated by the governments as we go on, and we're continuing to stack silver because we're expecting at some point this system of rigging markets is going to break, and it is highly likely that when values reset back to real values, that gold and silver are going to be revalued at much, much higher prices. And we'll talk to you next time.